All right. Good afternoon. Good evening. Good morning, everybody. How we doing out there? It's Ready, Set Crypto here today, Wednesday, the 16th of June, with our session that we call Ready, Set Live. I am Doc Severson, and on the other side over here, I've got... Say hi, Mav. All right. Good afternoon, everybody.
Voice behind the channel, if you will.
There you go. All right, let us know where you're coming in from today, and go ahead and hit that like and subscribe. And if you do that, you can beat the algorithm and get us some attention out there. So,
hello.
All right,
welcome everybody.
We have Morning Rise from Savannah. Welcome aboard.
It's a cool town. We should have a pretty short session today, but we've got some really cool stuff to cover. I'm going to talk about a portfolio I put together for crypto 2021, the summer in particular. So stick around for that. Should be diving in there any sec now. But yeah, let's finish up the little intro here. Where else are you guys coming in from?
Yeah, we got BC, Canada. We got California. I think everybody is outside today basking in the sun, so it's not surprising.
Finally free. The muzzles are off.
Disco Stew from Poland. All right. So what we'll do is Mav is going to go over his portfolio, and once we get through after that, what I'll do is I'll walk you guys through the potential path for Bitcoin in terms of what's happening right now, what will have to happen for this thing to bounce and recover, or what potentially would have to happen for this thing to slip into the next bear. Let's not talk about that, but we have to. All right, so there's, we got Bullhead City, Arizona. We got Albania, Wyoming, South Africa, another Wyoming.
That's the same Wyoming.
Oh, it's the same Wyoming. Okay, so Thorblurk stuttered. All right.
We will get into why potentially the bull market's over or it's not. Stay tuned. But yeah, let's move right into portfolio time. We're going to make this one pretty short here. For those who haven't been around for a while or are new to the stream, we're Ready Set Crypto. We're here to entertain and educate, and do so in, we hope the least shilling way possible. We're not paid to say certain things. We don't take promotional fees or anything like that to tell you what to buy or whatnot. This is not financial advice, by the way, but always the disclaimer. But yeah, we're here to provide you honest content, and not to tell you to do a certain thing, but rather to kind of open your eyes as to what's going on in the market, our perspective on things, having been in this space for quite a while now, and where we think things are going. So yeah, if you stick with us for about 30 minutes or so, hopefully you'll come out on the other side a little bit more informed about what's going on, where you should be paying attention to, how to be looking at the markets in a different way. And yeah, maybe learn a few things along the way as well. So moving along, let's dive into some portfolio goodness here. For those who have been around our streams before, this is pretty familiar. What we do is we try to every week come at you with about 10 or so picks as it relates to, like what we're seeing from the market, where we see a good trend that's starting to emerge, where we think we can get in front of it, and start to make some picks around that. So we like to look at certain projects that we think are doing some hot stuff, why they're doing some hot stuff, and provide some research on them for you. So what I want to make clear is that this is all free for you to access. If you're looking at this from a mobile screen, I'm sorry, I'll try to make this a little bigger for you, but really the best way to view this is on our website, readyset.vision, which is down in the bio below. Just look for the finger pointing towards the article there. And while you're there, sign up for our service because we're doing a lot of content on-chain analysis. It's this hot new way to look at the markets. I'm really starting to see a lot of emerging chatter about it. For example, ARK Invest, the guys, Kathy Wood's ETF, they've been talking about on-chain analysis pretty frequently recently. And we're working with Glassnode, who is kind of the gold standard in on-chain analysis, and they're doing some really awesome stuff. So we're helping them build some education content on there, and it's just cool. It's a new way to look at the markets. It's really awesome. Anyways, moving along here. So the general theme for today is, now that we're about halfway through the year, now that we're kind of getting into the summer months, and now that we're kind of in this crypto market that doesn't seem to want to make up its mind as to where it wants to go, how should we be investing? What is the portfolio we should be building in relation to that? How should we be allocating as it relates to, where should we be placing our focus? Where should we be placing our bets? How should we break things down? So the way I'm looking at this is, right now, there are a couple key trends to pay attention to this summer and really in 2021 and beyond. The first being Ethereum 2.0. Very important for you to pay attention to that. And as we mentioned last week, it's not something that's just going to be one and done next month with the EIP 1559 sort of release with Ethereum, the London hard fork. That's just the start of things. It's going to be going on for like a year or longer. There's been rumors that it might be delayed, etc. We're not sure yet, but what's apparent is that it's going to be complicated. But at the end of that process, whenever they finish it, we're going to have Ethereum be much more about staking rather than proof of work, mining. We're going to have an Ethereum that is much more scalable and interoperable and has a focus on layer 2. These are all really good things. This is going to push the entire blockchain crypto space forward in a way that, it's turning over a new leaf. It's a new chapter for the whole space. So I'm hoping that they can get it done, move it forward, and we can get over that sooner rather than later. Also important to note with that is it's going to make it's going to really address some of those criticisms that I think people have been levying against the crypto space recently. For example, the common one I'm seeing recently is like, Bitcoin and Ethereum are these huge energy hogs, and they take up the energy usage of a small country and all this sort of stuff. That's not as accurate as it might seem just on the surface of the proposition or whatever. But what's important is that after Ethereum goes through this hard fork, after they move to staking as their primary form of consensus, they're going to be using 99.95% less energy than they were before. So that will shut up the people who, that seems to be the only thing that they can throw against us at this point. And we'll be able to move on from that and talk about real issues. I think there's a lot to pay attention to Ethereum and Ethereum's competitors. Polkadot and Cardano are making some big changes this year. They've made some really great improvements, and they've caught up a lot on Ethereum. And they've basically taken a little bit of Ethereum's thunder. Cardano is going to be doing, they're going to be releasing smart contracts probably in August. And that's going to be a big deal because they're starting to go big. They're trying to attract the entire space of developers out there, not just the people currently developing blockchain. So they're trying to bring developers into the space, start innovating, start building out of the space. Really great stuff. We really want to see more of that. In the same regard, I really think that interoperability, scalability, layer 2, there's going to be a layer 2 gold rush, if you will. And the guys that are selling pickaxes during that gold rush, I think are going to do very well. As I mentioned in the video last week, layer 2 is kind of just adding more on-ramps and off-ramps and toll roads and whatever to help alleviate some of that traffic on the main highway. That's layer 1. So Ethereum, for example, Ethereum is just, it's clogged. It's like rush hour right now. You just can't move very fast on there without paying exorbitant fees. And that's affecting all of the dApps that are being built off of it. So we need a way to kind of alleviate some of that traffic. And that's where layer 2 comes in. That's where projects like Matic come in. And that's why Matic has gone absolutely ballistic recently. because they're doing some really awesome stuff there. That's where we also see stuff like Cosmos or ticker Atom doing some stuff to help alleviate the translation between layer 1 and layer 2, where I see there's a lot of potential for some really cool stuff going on as we move into that sort of new era of blockchain, that being defined by layer 2, that being defined by Ethereum 2.0, that being defined by DeFi starting to really take its own, starting to mature and do some really cool stuff. So, for example, Anchor is going to be building off of Web3 technologies. That's probably something you're going to be hearing a lot more in the coming days. That's where this new project that I've been looking into called Ergo, I think is really cool. They're doing some stuff on DeFi as well. And where I see projects like Algorand starting to make their marks to be a better form of cryptocurrency, more TPS, et cetera. Same thing with VeChain, also doing some really innovative stuff. They've got some big updates coming. So that hopefully is a good sort of sampling of why I picked these projects. Some of them, are obviously in the top 10. We've got 3 that are there. So nice, solid picks. We've got 4 that are kind of mid-tier, 15 to 37 there in terms of market cap rank. Nice middle of the pack, could, potentially break into the top 10. I think there's really good reasons for any of these projects to be able to do so. And then we've got some that are outside the top 100, sort of smaller caps, a little bit more risky, a little bit more of a risky bet on that one. So moving over to a new sort of feature for our streams here is a nice little pie chart where I built an example portfolio allocation for you. Please don't think that this is what you need to do with your money. But this is how I would allocate, for example, $5,000 or something like that. If I were putting that in right today, how to build this portfolio, I would put about 25% of it into ETH, as they're going to be the rock of this portfolio. They're going to be doing some really important stuff. There where I think a lot of attention is going to be focused over the next 6 months as we start to see crypto kind of come back, and why it comes back. It's going to be around the development, the innovation, the disruption that ETH is bringing, as well as what's being built on ETH. So ETH is going to be really hot. I think it's going to be pushed up to $10,000 before we know it, hopefully by the end of the year. Other than that, I would say Cardano and Polkadot, also about the other quarter of the portfolio, because they're Ethereum competitors. They're doing some really interesting stuff. Really like what they're doing. Moving on, we've got Matic and VeChain and Algo and Atom, all taking up about equal portions of the portfolio, because again, they're sort of mid-tier. So they're going to be 7.5 or 10% respectively. Just, nice sort of middle of your portfolio, taking up some good chunks that, hey, if they're not performing well, we could maybe slot them out with something that's doing a little bit more. And then finally, we have some risky picks, just 10% of the portfolio, not that big of a portfolio allocation. But again, these are the ones that high risk, high reward, hopefully. So we allocate the portfolio kind of in respect to that. So hopefully that all makes sense. Hopefully that was a little bit insightful. Hopefully you got something out of that. But I think it's for those who are saying that, like, hey, the market's really not justifying what's going on in crypto right now. It's time for a bear market because the expectations have gotten ahead of reality. Yeah, to a degree, that's correct. But I think there's a lot of really good innovation going on right now. I think we're not even close to what this industry is capable of, especially when we sort of expand the timeline to the next 10 years or so. We're in a whole new chapter of crypto. It's not 2017 anymore. This is a new space, and it's defined by new paradigms. And I think when we look just what's going on inside the space, but also externally, there's a lot of good reasons for that. So anyways, that's it from the fundamental perspective. Let's now switch gears and talk about the technical perspective. What is going on from the market side of things? What can we discern from the charts, and what can we use to hopefully make better decisions as we do a little bit of technical analysis here? So turn it over to Doc. I'm going to take a drink.
All right. Nice job, Mav.
Thank you.
Good job with the portfolio. All right. All right. Okay. So what I want to do here is I'm going to switch over to my chart and show you guys what I'm looking at here. Let's make sure this got to the right place. Okay. This is a log chart of Bitcoin versus the US dollar. And what I'm going to do is I'm going to do a little bit of top-down analysis here for the next 5 minutes or so. And I'm just going to focus on BTC versus the US dollar. So goes BTC, so goes the rest of the market, fortunately or unfortunately for right now. Now, there are going to be some assets which are going to trade inside or outside of that. But right now, this is where the money is being pulled from. What I want you to look at here is this was the initial rally that we had 2012 to 2014. Here was the next rally that we had 2015 to 2017. Okay. Each one of these represent or got started after range contraction, range expansion, range contraction, range expansion. What we're seeing right now, this would be very, very unusual if this attenuated right here and then came back down in the pattern. This would be extraordinarily unusual in terms of just a cycle, because what I've found is that over time markets tend to repeat. They tend to oscillate in really the same way. So this is my North Star, if you will. This is what I'm looking at to determine, is this an uptrend? Is this a downtrend? What's happening? That's at the monthly chart. Again, that's the log chart. If we go down to just the linear chart and look at what's going on just with the recent move over the last, say, year and a half or so since March of 2020, this is still an uptrend, believe it or not, because we've gone from, here's this low here, we've gone up to a high, and we've just pulled back. Now, by the way, that's a 61.8% retracement, but it's still holding at this point. So this is just a pullback. Now, when we get down to smaller time frame charts, like the weekly chart, we have a little bit more of a pullback. We're going to see more detail for what's going on. Inside that weekly or monthly pullback, we do have a weekly downtrend. We have lower highs and lower lows setting up. So what has to happen is this chart has to reverse back up to an uptrend. Let me show you what's going to have to happen for this weekly chart to reverse back up to an uptrend. Okay, what has to happen is we have to go down to smaller time frames. And actually what's happened here over the last week or so, if I go down to the 5-hour chart, is you're seeing a 5-hour chart move from a downtrend back up to an uptrend again. Higher highs, higher lows. That's the very beginning. That's the very beginning. We did successfully defend 30,000, although quite honestly, I wanted to see an undercut of 30,000. That would have been a much better setup. So we bounced off the bottom. This is just a daily swing off the bottom. What has to happen is for this thing to reverse, we have to set up a higher low. Now, I don't know where that higher low is going to show up. It's going to be somewhere in this vicinity, in this area. But during this, what we have to do is we have to stoke up the negativity. Everybody has got to be convinced that this has no hope whatsoever. And we're already seeing some of these comments that are in the chat here that people have no hope. And this is good because you need skepticism. You need people to give up on this. And this is typically where you're going to find your bottom, is that capitulation where the price is going to roll over again and people are going to say, all right, that's it. Forget it. This has no hope. I'm going to sell out now before the price goes lower. So this is one way for this to reverse. So this has to reverse on the daily chart. And then once that reverses on the daily chart, this can begin to reverse on the weekly chart as well. The same thing will have to happen. If we do bounce from here, we're going to have to set up a higher low on the weekly chart with the same associated negativity, although it's going to be even worse this time in the weekly chart. But once that sets up the right toxic level of negativity, this is where we can squeeze to the upside. This is what's happening for all those meme stocks. For those of you that are following things like Wall Street Bets, is you've got to get all that negativity squeezed out to the upside. When you get shorts on the run, they've got to buy back their positions, and that adds to the demand. So follow the different time frames here. I'm going to go back here to the both of us here. So follow the different time frames. Follow the North Star. Follow something where you've got a good monthly chart and you understand what's happening there. Go down to the weekly chart. Is the weekly chart in an uptrend or not? What's happening at the daily chart or even intraday from there? Put all the puzzle pieces together and you'll see what's happening with the price, where you don't feel like you have no idea, no clue, and all you're doing is you're logging onto some Twitter feed to determine how to invest your hard-earned money, right? So have a plan behind this, understand what will have to happen for the price to rebound from this, or if the price does undercut 30,000 and keeps on going, closes below there, more than likely we're heading for 20,000. This is where I'm going to count this as a bear, because if we lose that 61.8% fib on the monthly pullback, then that typically shows that we're going to complete the triangle and head right back down to somewhere in the 5 digits again. Okay, with that in mind, we got about 5 minutes left here. We'll take your questions before we skedaddle and hit the road here.
Yeah, so I want to address my haters here. Zeno Bob talking a little smack on me and saying that my portfolio is a typical top 100 portfolio with no risk and no reward. Ooh, that cuts deep. Ah, man. Well, Zeno Bob, I appreciate the shout out of it's good to be challenged on your convictions on something. And here's where I would come back and say, you're playing a different strategy than what I'm trying to do here. I'm trying to do risk sort of like reducing and doing capital preservation and trying to basically hold as many sats as I can before we move into a more like an environment where we could go back into the small caps, the moonshots, that kind of era, where like that's an acceptable bet. I don't think that's right now. I think the market is too volatile and it's just too casino-like right now for us to be betting on stuff outside really the top 150, top 200. You're just not going to get the sort of results out of that that I think most people are going to want. Now you could get lucky and you could say, oh, well, look at me. I did 1,000% gain on this small cap coin. Look at, I'm so great. But more often than not, you're going to see, negative 95% baggers, and you're not going to be happy with that portfolio. And I think most people would agree with that. So what I'm trying to do here is build an ideal portfolio for where we are right now. I'm trying to minimize the risk so I could get at least, a mid-tier sort of return on it. I'm not looking for like high risk, high reward kind of stuff all over the place right now. Go back to my videos from February and March where that was the strategy because it was working. And I called out a lot of coins that did very well. Not all of them did, I will admit it, but more often than not, it was sort of a winner's bet. So long as you had the fundamentals in mind. And that's exactly where I built the portfolio from today. Each one of these coins that I included on here has a fundamental reason for why I included it. That's the strategy. There's either upcoming sort of big releases that they're putting out, or they're just in line with what I see is like the upcoming trends on stuff. So, hey, it's cool that you've got a strategy you think is working in this market. I think right now people need to take a step back, play a little bit of reducing risk, capital preservation, having some fundamentals in mind. And when we get back to a more bullish market, yeah, let's obviously go back into the low caps and have some fun with the moonshots. But hey, I want to play it safe here right now. I think that's the move to make right now. Sorry, a little bit of a spiel there, but I think it's important for people to hear that, because too often on YouTube, you get people just like, oh yeah, buy the dip, buy all these moonshots, buy all these, like this is easily 1,000x coin. And like more often than not, people lose money that way. And I think people got to be honest, at least with the way the market is right now.
A lot of times in these sessions that we do, we get asked like, hey, where's, XYZ coin going to be by the end of the year? And if you think about just the premise of that question, it's absolutely, it's kind of ridiculous. I'm not throwing shade on anybody in the chat room here or anything like that. It's just the notion that anyone or anything knows what the price will be in the future is, it just doesn't work that way. What you find is the less that you need to know what's going to happen in the future, the more that you're becoming a professional investor. Because a professional investor does not have to know what's going to happen in the future for them to make money. They merely operate in the now, like what's happening right now. Because what most people cannot see is what's happening right now. Most people are either stuck in the past in terms of a bias, or they're looking at the future with that same bias in mind. So understand how to evaluate what's happening right now, and you're going to be way ahead of most of the market.
Yeah. Maybe that's a more salient response that I could give is like where I see the market right now, what's happening to the crypto space in general is that we're going away from sort of the ICO trend where, it was just shitcoin casino, right? You could throw money or throw a dart at a board, and you would make money off of it, right? There's still a little bit of that. Yeah. And it's fun. That's crypto. There's no market like it on the planet. I love it. But at the same time, crypto's growing up. We're becoming more mature, we're becoming more institutionalized. We're getting adopted in a much larger way. And what comes with that is we have to think a little bit smarter and use a little bit more data and, look at this kind of like VCs. We have to think like VCs in public markets and start to think about what's going to be around in 5 years, what's going to maximize yield over that lifetime. Because I guarantee you, it's not a lot of these shit coins. They're not going to be around maybe even a year from now. And we've seen that a lot of them have turned into rug pulls or, just have been abandoned. If you go back to 2017 and all the ICOs that launched, I think it's like over 90% of them failed or were scams or something to that effect. So advising people or just you being your own advisor in this regard and wanting to stay in this industry and continue to play this game, just pay attention to the way that the tides are shifting in this regard. I think it's time to start thinking a little bit big picture, start thinking more about value rather than speculation, and start to build portfolios like that. I think that's just the way the market's moving. So we're just trying to get in front of that. Again, we're just trying to see the trends as they're moving, like 2 steps ahead. But it's tough. This space moves very fast. So, anyways, wow, we've gone on some tangents today, but it's been fun. Hopefully, okay. I think let's take one more question because I don't want to take up all the time here, but monopolize. Let's see. There was a question about, are we staking any of these things? And that's a great one. And I think that's kind of in line with what we're talking about here today too, is staking is becoming more prevalent. Build some passive income into your portfolio. I think that's a really good way to not sweat these dips so much and kind of realize that especially when dealing with deflationary assets, which after, for example, Ethereum, after it goes through EIP 1559, the, upgrade it's doing in a month, it's going to start to be a deflationary asset. As I talked about in our newsletter yesterday, it's going to start to appreciate in value just like Bitcoin does. There's just going to be less of them to go around, and it's going to be a natural driver of price appreciation. And then you add on to that the staking factor. You're getting double dipping on your assets, and that's a great thing. So build some of that into your portfolio, build some certainty, some stability, some staking into your portfolio. I think you'll be a little bit more happy about it. So anyways, guys, like we said, this is going to be a short session, but we appreciate you sticking around with us. As always, we're here doing this every Wednesday in some form. But if you want to talk to us during the rest of the days of the week, we have a Discord that you're more than welcome to join down in the bio below, as well as some other communities such as Ready Set Trade, which Doc runs, which talks about the stock market, equities, and how to become a better trader. Like I mentioned, we've got Ready Set Vision, which is all about learning on-chain analysis. And we've got Ready Set Crypto, which is all about learning crypto and how to trade it more effectively, how to look at fundamentals like we've been talking about today. and just some of the things you should be watching out for. But as always, it's been a pleasure. Thanks so much for hanging out with us. Thanks for being a member of this community. Or if you're not, please like and subscribe to the video to continue to be a part of this. And Doc, do you have any closing thoughts?
No, I mean, it's, I think you stated it well. You know, just one thought on the death cross. Look, guys, I've seen, I don't know how many dozens and dozens of death crosses over the years. Everybody gets excited about them. I've seen Hindenburg omens show up and everybody loves that name because, oh my God, it's the Hindenburg omen, the death cross. Oh my God, let's get bearish. And I've seen so many of them fail. And it's always the one that actually works out where people say, see, I told you that death cross, those things really work. But, you know, it might be one death cross out of 20 that actually works. And so to me, it's statistically insignificant. We need to, death cross is a big time trailing indicator. So stick with the price. The price is happening today, and it's not something you have to wait for a cross or anything like that. All right, everybody, you guys take care. Thanks for hanging out with us today. We'll do this again next week and come loaded for bear. Thanks, everybody. You guys take care.
Cheers, guys. See ya.